Joining us to discuss all things market is money manager Ted Oakley, managing partner at Oxbow Advisors. Ted, great to see you as always. Thanks for coming on.
Thank you, Paul.
A lot of red at Wall Street, Ted, over the past month or so. Conflict in Ukraine, inflation. Now we have the central banks beginning to tighten policy. Seems to be a stressful time to be an investment manager.
Well, it is. I mean, I think, I've been around a long time, so sort of knew what to expect. I do think, actually, that this will be different for a lot of people because a lot of people only have been in the industry for the last 12 or 13 years. And this looks to me, at least, and us at Oxbow, like a classic bear market. So I think people will, it'll be interesting to see how they navigate it. But so far, I've noticed that they buy the dip and they just keep on getting burned. But that's classic bear market, though.
We've heard over the past couple of years, Ted, that the stock market is dislocated from the real economy. When you say bear market, are we looking at a recession in the real economy as well?
I think, Paul, when you go in with the Fed this week and they raise rates, and we're really close to an inversion between, say, for example, the 2 and the 5, the 2 and the 10-year Treasury. When that happens, wouldn't say it's not a guarantee, but it's a very, very high probability that you will have 1 or 2 down quarters. We actually think we will anyway. We put those odds at better than 50% that we will have at least 1 negative GDP quarter, if not 2, but at least 1. And so if the Fed goes ahead and goes on through with it, I think it will invert that curve, and all of a sudden you'll be facing something you haven't faced in a while.
Wow, incredible to hear it. Are you expecting stocks to go much lower, Ted?
You know, we are, and I will tell you why, Paul. One of the things we've noticed is that even, the bear market, actually NASDAQ today officially went into a bear market down more than 20. Russell 2000 was down 21 year to date. So they're in a bear market, and technically, but here's the thing. I look back last week and we had this enormous amount of money that came in, that rushed in on the low days again. And I've got a couple of graphs that we keep around that show, last year was the biggest year ever for money coming in the market, ever. It was bigger than the 19 years before that. And so what happened is, if you look back, going back to about March of 21, all of that money that came in is now underwater. So see, what happens is that's the way you beat people down in a bear market. So our idea is the Fed can't help you right here. You'll probably have to go down another 10 to 15 points in order to get some sort of pivot in here. And that may not be the end of the bear market, but it may put you in a position where you really get a nice rally out of that. But it really depends. But if they come through and keep on raising rates, they can't go over and support the stock market at the same time. That's the wedge you're in right now.
That's a significant haircut, Ted, if it were to happen. How are you rejigging your portfolios, or how are you going defensive?
Well, we were always defensive. We only have 3 portfolios, and one of them is basically a sort of a bulletproof kind of portfolio. It's very short term, and it's in great shape, right now. Actually, we hadn't lost any money this year, even with bond funds down and bonds down, because we have very short maturities. The middle portfolio is a high income portfolio, and on there we own a lot of resource type things and that inflation type hedges and that sort of thing. And that's actually helped us a lot this year. It's actually up a little bit for the year. Now, where we've been affected, and we have 30% cash in our stock accounts, but in a bear market, they all go down. I mean, you can choose the best fundamentals you want to have, but if you go through an extended bear market, it's hard to hide unless you're in treasuries. And so we're high cash all the way around. We probably average right now close to 35 to 38% liquid. We'll use that, though. We'll use it as opportunity for us, but that's where we are, right? That's how we really fend off the bear market.
Let's talk cash. I've got about 30 seconds, Ted. Let's talk cash and inflation. Any assessment of where we're going to go over the next 12 months?
I have to say, in inflation, I think your highest months will be, February, March, maybe part of April. Then I see us coming back down. We'll still have inflation, but we think we're going to be more on the order of probably 4 to 5 points at the most, if you have that.
Ted, really appreciate it. Ted Oakley, Oxbow Advisors. Thank you.
Thanks, Paul.